Allison, thank you. And I wish you would have told me that beforehand so that I could put my Daffy Duck picture up. Thank you. And I see a couple of clients, so that's awesome. A couple of clients that will be dealing with me later on this week, so they just can't get enough, I guess. So I'm super excited. I really appreciate, Allison, you and GCAC creating a opportunity to share and to add value. I'm going to let Phil introduce himself, but I'm going to let you know that he's going to do most of the heavy lifting here. He and I met probably 2 weeks ago to talk through some of these topics, and I was blown away at the amount that I learned. And those of you that don't know, I do a podcast, and I am going to be releasing the podcast about that conversation, but I wanted to let this take place first. So Phil is tremendously knowledgeable. I'm very blessed that I work in the not-for-profit space, and that's kind of where we have a niche. I'm going to play off of Phil a lot today and hopefully ask some questions from a nonprofit industry mindset about some of the things, and hopefully I'll hit some of the questions that you guys are wanting to answer or have asked. With that, I'm going to let Phil introduce himself and run us through this, man. And Phil and I are longtime friends, so forgive us if we get casual.
Thank you, Don. That was quite the flattering intro you gave me there. So hopefully I can lead up to like maybe half of that. I know we've got a couple of our clients as well from Hylant on the call, but for those that don't know, Hylant is a full-service commercial insurance brokerage based in Toledo. I've been with the firm a little over 2 years, and prior to Hylant, I was not a deep insurance experience. I ran a software company here in town that did HIPAA compliant paperwork online, and then before that, I had a lot of exposure within athletics, and so. But I joined Hylant really for two key reasons. It's a family-owned ownership, but it's one of the largest brokerages in the country. And so it's that hybrid kind of perfect niche role of a trusted advisor for our clients. And so, my role when I'm working with my clients is to make sure that they have the proper risk management in place relative to their kind of appetite and tolerance, so that they can pursue their business and their dreams as fast and as hard as they want. So in other words, I tell my clients often, I want to make sure that you have the right brakes for the type of car that you're driving, so that you're not worried about how hard and how fast you drive relative to something bad happens. And so we're really with the topic and the title of today's presentation, organizing your risk management to maximize your creativity. That's my goal for all my clients. I know that's something that Don shares. We are the broker of record for GCAC, and so that really plays out into how we serve them. But that's today is about kind of providing a little bit of education relative to risk management, get you thinking about how you're going to handle it within your organization, and ultimately give you some comfort so that you can run really, really hard. It will not be a full blown out exposure of risk management, but my hope is that everyone can take something away. So go through our agenda here. We've really already done our introductions. Don was very kind on mine. I will say that Don Wells is one of my favorite people in the world. He's super knowledgeable. He is super down to earth. So if you don't know Don or don't work with him, I highly suggest that you seek him out. Super high integrity individual. But from here, we're going to talk about who's on first. We'll talk a little bit today. The two topics we're going to cover is executive risk, what that is, kind of what's going on in that marketplace relative to the audience today. We'll then dovetail into cyber risk. And then from there, we'll open it up for questions. So, I don't anticipate this taking the whole hour of me talking. That's not going to provide you the most value. Really want to get you thinking, and then maybe have some open dialogue at the end. So who's on first? This is funny to me. Hopefully, if you don't know who this is or what this is Abbott and Costello. They did a really funny, I thought a funny comedic thing back in the day of who's on first, and it was this back and forth banter. The takeaway that I like about it is it applies in real life all the time, where no one knows who's covering what, and no one really knows who's responsible for what. We often assume that such and such is going to happen, but we never seek to verify. I have a family, 3 little kids, 12, 10, and 7. We're very busy. And so it is often a conversation of our house of who was responsible for this and who was responsible for that. And we're learning. We're learning how to have ownership in our family and being responsible for what is ours. And so I think relative to insurance, this is sometimes can occur. We assume that somebody else is taking care of it. We assume that somebody else has knowledge of what we have in terms of coverage. And the worst possible time to find out what you have is at the time of loss and time of claim. So we'll often tell our clients, nobody cares what the premium is at the time of loss. They just want to know, is the claim covered? And so this is, I would say, on this slide, the takeaway is know who your trusted advisor is managing your financials from a CPA perspective, and know who your trusted advisor is from an insurance perspective. There are many good options out there. I feel like Hylant is one of the strongest available, but it's really, you're empowering them to take care of you in this space. And so our job is to answer questions, explore. We've done a lot of that here in 2020 and 2021, as our clients have sought to hybrid their business and hybrid kind of what they offer to the public. I know I've worked extensively with Greater Columbus Arts Council on how they've had to pivot, and just making sure they're covered to do whatever it is they want to do. If they're not, we talk about what those implications are, but if they're covered, it gives them peace of mind to run really, really hard after it. So
Hey, Phil, if I can jump in and just add to that, because I love what you said there about who's on first and run really, really hard. One of the things that I talk about with my clients, obviously most organizations will go through a annual strategic planning session where they get together and they look at their strategic plan and they make this adjustment or that adjustment. And I also know that in this city, in this industry, folks are working very hard at diversifying revenue streams, right? We want to get more and more diversified from just contributions and grants. Well, what does that mean? That means we're doing more events, we're getting into maybe some social enterprise areas and things of that nature. And every time we add a layer of business, Phil's question about who's on first becomes vital, right? I know that some organizations now are looking at expanding even their scope of what they do to reach out and deal with some of the social issues at play. Well, it takes 5 minutes, it takes 20 minutes to determine, hey, is there something here that we need to be covered? And that's where your trust advisor really comes into play. So Phil, I love the fact that you're talking about that, but I wanted to make sure that we thought about it from a standpoint of every year we go through a strategic planning process. And if we do that well, new tasks are coming out of it that someplace, somewhere, there's risks that need to be covered.
that's a great point, Don. I think as you're talking, I think about it as well. One of the things that we talk about with our clients, and we're kind of beginning the relationship, is they may have questions that off the cuff, we may not know the answer to right away, or we may not feel like we're 100% confident in answering that question. And so your trusted advisor doesn't have to have every answer right away, but they do have to be able to tell you that they don't know the answer and that they're going to go find out. I think we've learned a lot in the last 18 months. And as things change, going through PPP loans last year and the different pieces of legislation and how it impacted our nonprofit clients, there were many times there to ask a question and we didn't know the answer. And we told them that, but we also committed to finding out what the answer was and coming back to them with it. So I'm going to go to the kind of talk a little bit about executive risk. We work through these transitions. So at a high level, executive risk has everything to do that impacts your directors, your officers, your managers, and the business entity. And this can encompass governance, finance, and benefits. So there's a couple of areas of coverages here we're going to talk a little bit about. The first one there you see is probably the most prominent, and this is sometimes what our clients will think of executive risk as only being directors and officers liability.
I did when we talked 2 weeks ago. That's all I thought it was.
Yes. And so it's a common misconception. It's an important part of executive risk. But really this protects your individual directors, your officers. If you've got, shareholders or investors within your organization, this protects them as well as some of the employees in most circumstances relative to decision making, relative to them being captain of the ship, the types of decisions that you make as a director and officer. What's true is when you're the leader of the team, you have to make hard decisions, and you have to be able to make those decisions independent of what others may agree or disagree with those decisions. But this is designed to help our leaders make the right decisions for their organizations, for their firms, and not worry about potential repercussions. It also provides some balance sheet protection for the organization, for indemnification for the directors and officers. So directors and officers do have a liability relative to their decision making at a personal level. And so directors and officers liability coverage indemnifies them and gives them a blanket of coverage financially if someone were to sue the board of directors or the leadership of an organization.
Now, there's something, most of the organizations here, and Phil, I don't know where you're going to get to this. Most of the organizations here probably have D&O, right? You don't have board members in these organizations without some level of D&O. But the question that is really at play is that there's different things that each D&O policy covers. Like there's not a blanket D&O that exists in the marketplace. So it becomes a matter of looking at that D&O to see what's really covered. And also, Phil did a great job of educating me, and I don't know if this is the place or you're going to do it someplace else, Phil, about the cost of defense and whether or not that's inside or outside of a policy. So I don't want to get ahead of you, my man, but I do want people to know that there's more to this D&O than, yeah, I have a certificate. We need to make sure it's covered. For instance, I'll give you a great for instance of one of the things that I've dealt with in the last year. I have an organization that has a D&O, and their bylaws require 4 meetings a year. They had 3. D&O became void because they didn't comply with their bylaws. D&O was thrown out the door, and they no longer had that coverage. Now they were able to reinstate it, but you have to understand that if you're not functioning as a director, you don't have that coverage.
You bring up a great point. I mean, relative to directors and officers coverage or executive risk, there's a variety of carriers that will write it. They all will look at it a little bit differently. And so when you're picking out a broker, when you're selecting your advisor, whether it's a CPA or an insurance broker, make sure you pick one that actually reads the fine print, that reads in our case, that reads the policies. So we read policies. It's a little cumbersome. Admittedly, it's not the most exciting, but they're legal documents from a perspective of they tell you, the insured, what is covered and what is not covered. And so whether it's the definition of what a director and officer is, how the policy responds. I mean, Don brought up, brings up the good point of a duty to defend. So within directors and officers liability, we want to make sure that the duty of the insurance company to defend you is outside of your limit. So in other words, if you've got a limit of, let's say, $1 million, you don't want defense costs to erode your limit. That limit is designed for any settlements, any verdicts that may come out of litigation that are not in your favor. And so it's that small print that you want to make sure your advisor is reading and is advising you on should you move forward with the policy, because they are not all created equal. With that, in a similar fashion, is employment practices liability. So For the organizations that have employees that are a little bit larger, this protects the D's and O's as well as the organization from claims relative to employment-related acts, wrongful termination, discrimination, harassment, and retaliation. So this is we've seen an uptick in claims in this area relative to COVID, whether it be wrongful termination or improper wage and hour. We've seen some wage and hour. We've seen some harassment type claims relative to discrimination of working from home versus working in the office, making sure that my office setup that is now remote, I have all the access to all the same, information and things that I needed that I had in the office, right? So there's been lots of activity in this space. And then for those, this may be a smaller group on the call.
Well, Phil, before you go to that, let me hop in here on that employment practices, please, sir. Two things that I just want to tag on to what Phil said. As I said, he's doing the heavy lifting and I'm just jumping on it at the minute or two here. There's two things from my standpoint as an auditor that I've started to see that people may want to consider where this type of insurance or this type of coverage becomes valuable. The first one that I am seeing more and more and more is that people are referring to certain compensation of employees as stipends. So they're giving folks additional things and they're calling it stipends. Stipend is a very technical term by the Department of Labor. So if you're doing that probably will increase your risk here. And you need to make sure that certain things are covered. The other thing that has been very interesting that I've seen is that claims here have started to increase regarding and associated with social bias training. When people are going through the training, sometimes they feel as if they are being pointed out, either good or bad or different, and that will create this type of a claim. So even when we're trying to do good things and we're trying to educate people, if we don't always hit the mark. So again, that goes back to, hey, you know what? We're going to start doing some of this bias training, this social bias training. Well, the question becomes, okay, do we have insurance that covers if we miss the mark in this training?
It's good. I mean, this is an evolving area. I think with folks working from home now more than ever, we're also starting to field questions from clients of, if I want to start to bring folks back, what does that look like? What am I required to do by law? One of the biggest areas that we'll see claims here that may not be covered is if an entity has practices written down in place that they don't follow. So that would be an area that I encourage all my clients and would encourage everyone on the phone today. If you have an employee handbook, be very, very up to date on knowing what is in there and what you're requiring of your employees, how you handle certain things. Because if you don't follow your own practices, and it'll come up again in COVID later, it could expose you for an uncovered claim. And so we're trying to avoid that with our clients. Last coverage, I would describe an executive risk, or second to last rather, is fiduciary liability. So for any on the call that offer any sort of a retirement option for their employees, fiduciary liability is a super great coverage to have. It is not very expensive. What I will say is, in the state of Ohio, the law states that if you're a fiduciary, so if you're a CFO, controller, and you're making these retirement options available to your employees, you are personally liable in a lawsuit. And so if I work for Don and Don provides me my retirement solution or my options, and I don't feel like I got enough options, I don't feel like the options benefited me well enough, I'm not happy with the results, I can actually submit suit against him and the firm relative to that 401k or 401(b), any of those types of plans, ESOPs, And so it's just, it's a miss that we'll see often in policies. And so we always ask our clients, do you have a retirement option for your employees? Do you plan on adding one? If either of those are yes, we want to confirm that you have fiduciary liability. And this probably good in Don's world. There's probably a lot more of this that he could speak on.
No, I think you I think you've hit it there, Phil. From what I see a lot is the 403B and the 401k. Is that we don't always even know who the fiduciary is. So it's really hard to know if we have coverage. We know we have a plan, but we don't know. And usually the plan is outside the organization, and we're paying someone else to administer it, but we don't know all the ways where their line stops and our line starts as far as who's responsible for the decision makings and the investment options and things of that nature. So I think it's just really good to make sure the roles are defined and you know who's playing what role. Again, who's on first.
Yeah, of the three, as I mentioned, this one is relatively easy to transfer the risk. Again, insurance is the transferring of risk. So there's nothing wrong with retaining that risk as an organization. That's certainly a risk strategy. Another would be to transfer the risk. It's your role with your trusted advisor to decide how you want to handle the risk. The last one is network security and cyber. We'll get into this more, but this would be any sort of financial loss due to data privacy or network security events. And so we'll actually land on cyber a little bit longer as we kind of go through the presentation. So from an executive risk perspective, the major trend that's affecting coverage is COVID-19. I not laugh, but when I do these presentations, I look at these slides. I mean, sometimes this can change on the day, depending on what's going on. Certainly anytime any new piece of legislation is passed and then gets kind of fettered out in terms of how it's going to play out. But relative to employee terminations, layoffs, furloughs, the big trend we're seeing now is whether you're going to have required or optional vaccination for your employees, how that's going to work. Can you incentivize employees to be vaccinated? And then the other piece there is the unsafe work environment. So I mentioned earlier where a firm can get tripped up is if they either don't have a policy relative to working in the office under COVID, or if they're not following that policy. And so I work in the office in our firm, we're about 20%, but we have protocol in place where we have to submit to a questionnaire that we're not feeling sick, we've not seen any symptoms. We get temperature checked every day. We have to wear masks any sort of shared area. And so if a firm has a policy and is not following the policy, that can be just as damaging as not having one at all. And so what we're doing with our clients is just advising them on what's out there, what's available, helping to guide them so they can write their own policy. And this will be ongoing. Many firms have not opened their doors back up, or they're kind of slowly starting to do so. And they're starting to think about what's the long-term look like. I mean, our office, we may not be back 5 days a week. And so what does that look like? And what will the process be when you come to work? With that too is a remote work environment. So that has implications from an executive risk side and a cyber perspective. So from an executive risk, it's what accommodations are you making your employees to work from home? Is it clearly outlined how their time should be spent? I think we all can attest that when you're working from home, it feels more flexible. And so I'm in the house. I can clean, I can do laundry, I can attend to my children. And if the employer's okay with that, great, but that should be outlined. That those expectations should be outlined in a different work environment, what that looks like. Do I have everything that I had in the office from a computer setup and network access? Do I have all of that at home? Has my employer made that available to me and made it so that I can work effectively from home in the same fashion I did from the office? So
Phil, I'm going to financial impact. You can talk about that. I'm going to ask a question and see if I can get some activity in the chat. So please, please, please always feel free to bounce questions to us. I'm looking at the chat, feels lifting heavy. But here's the question I have. If you work in a work environment and you have a dress code, someone's working remotely, are they required to meet that dress code? We've all seen the videos and the funny times when someone's dressed up top but not down the bottom, and then something happens during the course of a Zoom call. What happens when that person doesn't meet your dress code and someone else on the call is offended by that? Is that harassment? Is that covered? Those are the types of crazy type of things that we probably should be thinking about as we move more and more people home. Does the dress code apply? And as you're contemplating that, real quick story that came up, I don't know, a couple years ago, and this was a remote work environment. So the story went, there was this guy who was on a business trip, and he was hanging out at the hotel bar, made an acquaintance, ended up having an affair. If I recall the story properly, his wife sued his employer because he was on work time. So when does work time start? When does work time end? Those are the types of things that we're running into with COVID, because I know from my conversations with my friends who are working from home, their comment is, I don't know when it stops anymore. And it just continues to go on. So do we have the rules or the parameters in place to limit our exposure now that more people are working from home? So just some of those things to think about as Phil works his way through that remote work environment discussion.
Yeah, and I think to that point, Don, I mean, you don't be afraid to ask your peers, in addition to your trusted advisors, in terms of how you handle it, but you ask your peers and find out what works best for your organization. But I do think those underneath you, as in a leadership position, they want to know kind of what those boundaries are. They want to know what the expectations are. So if they're not asking, be willing to kind of engage the conversation and tell them what that looks like. We ran a poll here in our firm late last year, and one of the questions was, have you worked more or less, during the pandemic from home? And the answers were really interesting. I mean, some people, they were honest and said I worked less. Some people worked more, but they also perceived that they were supposed to work more because they were home. And so there's just a variety of things that will happen and can happen. And so just stay on top of it. Last, major trend affecting coverage is the financial impact on organizations. We touched on this earlier. COVID changes the way that many things happen, and will continue to change the way things occur moving forward. And so whether one of your organizations or your organization has lost money relative to COVID, you've not been able to open, you maybe applied for some PPP loans, some other grants, or moving forward, the cost of reopening, the cost of staying open, all those considerations matter. And for certain elements and aspects of that, the risk can be transferred to insurance. I will not say that it's in all cases, but in some cases there is coverage. And so ask your broker, if you haven't already, what coverage may we have available to us, either in our current policy or what would the marketplace potentially yield if we were to do a little work and some research. So I'm going to get, I don't know, everyone on the call is, where your renewal is on your insurance, but I thought it'd be at least good to provide some vision on what we're seeing from a ratings perspective and premium to help prepare you. Make sure your advisor from a risk for insurance perspective is giving you this information well in advance. We know that many of our nonprofits, especially in the arts community, have been impacted greatly by COVID. And so our thought is, we don't want to give bad news late. So if the news is not great, we want to make sure that we're giving it to you with enough time to plan. So for directors and officers insurance, the primary layer would be between a 20 to 50% increase. Know that with any insurance, part of that risk you control, right? So it's your individual loss experience. But part of it is also the experience of the carrier that you're with. And so we've had many clients in the last year who they didn't have any claims on a particular line of coverage, but if the carrier they're with had a lot of claims on that type of coverage, that carrier was going to raise the rates on them. And so we work for the insured, not for the insurance companies. And so we advocate for our clients, and when it's appropriate, we'll move the coverage to a different carrier. But we always want to make sure that they're kind of prepared and know what's coming. So for those that have any sort of excess or umbrella coverage on their D&O, we're seeing those premiums increase as well. We're also seeing carriers that are willing to take less of your umbrella. So if you've got, a tower of coverage above your primary, instead of taking all of it or half of it, they may be taking 20% of it, and they're wanting to be a little higher at the top so that they have less exposure. So make sure your broker is working that for you. Also seeing in all lines, whether it's primary or excess, increased retentions. So retention is what you as the insured have to pay prior to having coverage. So we're seeing carriers asking for an increased retention, or another word, deductible, prior to you actually receiving coverage on your policy. So relative to healthcare institutions, but we're also seeing reduced coverage and elimination of coverage for antitrust and regulatory. So relative to the arts community, there are some coverages that are being eliminated or reduced. And so when you're going through renewal, make sure that your broker is asking the carrier if any coverages are changing relative to what you had in the previous policy year. You don't want to find out after you've already renewed the insurance. For the others there, employment practices liability, we're looking at 20 to 30% increases. Additionally, increased retentions. Those are for mass or class action lawsuits. So there have been more class action lawsuits relative to employment practices liability. And so that's also driving some of this. We also have what are called social verdicts. So when these types of executive risk claims go to trial, sometimes you'll see them on GL claims as well, but specifically on executive risk, if there's a lawsuit, what we're seeing is that juries are getting younger with the population. I mean, it's all relative, but as the juries get younger, they are siding more and more with the plaintiff. So in this case, if it's an employee and there's an employment practices lawsuit, or it's an executive risk lawsuit, they are siding with the plaintiffs more often, and they are coming down with what we call social verdicts, where they're really trying to punish the defendant with a very, very large verdict to kind of make a statement to say, you can't do that, that's not okay. And so that ultimately drives the cost of insurance up from the carrier side. Fiduciary is much lower in terms of the types of increases we're seeing. It's probably more important that you have the coverage, and I wouldn't worry as much about increases in fiduciary. Directors and officers is the hardest we're seeing, and we're also seeing some carve-backs on side A, which is specifically to the D's and O's having their own separate limit of insurance if they're named individually in the suit. So any comments, Don?
No, sir.
Okay. So we're going to transition a little bit to cyber coverage. Now, when I work with my nonprofit and arts types of clients, sometimes they'll kind of roll their eyes at me when we talk about cyber, or they don't do a lot online. And so it's not just for, you don't have to be Amazon or an online vendor to have cyber exposure. And so the three areas that we'll talk about, one are phishing emails. And so these are broad range emails that are sent out to members of your organization. and they're trying to get your employees to respond to the email, which gives them a token to get into your network. And so you'll see in the next slide, but the number one way to prevent any cyber claims in your organization is the employees of the organization. The vast majority of incidents occur because employees open emails that they shouldn't open, they click on links that they shouldn't click on, and it lets the bad actors and threat actors into your network. Number two is data breach from your cloud providers. So most folks use a cloud provider to store their information. If it's Amazon Web Services or a host of other providers. If they have a data breach, you have liability relative to that data getting out into the marketplace. And a key piece, and it's listed there in the risk management tips. Amazon, for example, does not indemnify you for a total loss that you have in the cyber incident. So if Amazon has a breach and that breach impacts your network, your information getting out into the web, they do not indemnify you in full for your costs. So if you look at your contracts, in most cases, network providers or cloud providers will provide 6 months of your subscription costs as coverage. And so one of the things that we do for our clients is we review all their contracts for them relative to insurance language and indemnification language. So when they enter a leasing agreement, if they sign a contract with a service provider, any type of legal document they sign that has any sort of warranties, guarantees, indemnification language, we will read it for them. And we're not attorneys, but we will advise them on how that contract will respond relative to insurance. And
this is and that's really, really important, because in my professional liability insurance, I do have a cyber piece to it, and that policy requires me to do certain testing, or else coverage is not in effect. So it becomes really important that you read those policies and that you know what your requirements are. I know GCAC does, as Allison said, a ton of training on it, but I just wanted to mention that as a personal experience, every year when I renew my policy, I have to commit to a certain amount of I guess, almost false attacks. And that's what they're saying now more and more with the phishing emails, is that you send them to your own employees at times that they are busy. And when they click on it, it sends them to a training session. But my insurance carriers are requiring that to have the coverage in place.
Yeah, it's actually one so Hylant's insurance carrier, we actually ran an exercise. We have about 800 employees across the Midwest. And so they did a training exercise. We didn't know it, but they actually sent us an email that looked like a Hylant email, and they tracked what employees did with the email. Now, they didn't call out, Phil Hines specifically, but by office, they tracked what percentage of the employees opened the email, what percentage of them clicked on the link, what percentage of them forwarded the email to another employee. The takeaway for this group on this call is, if you have cyber coverage, and really any coverage, but we're talking about cyber, your carrier may have resources for you to help you get better. And so it's your broker's job to be educating you on that and bringing those opportunities forward so that you can take advantage of them. Sometimes we'll talk with my clients. Insurance companies don't want claims any more than you do, because they're the ones that pay for it. And so they have a shared interest with their insured to prevent and minimize claims activity. And so take advantage of that. Go back and look at your policies. Ask your broker, if I work with CFC or Beasley on my cyber policy, what resources are they offering that I can take advantage of that maybe we've not talked about?
Probably a comment more for some of the smaller organizations on the call. Just from the way that I have a small theater group, and they do just about everything at the day of the event using a Square or some type of a third party, if you will. So now the question becomes, what's covered and what's not, and where's the line? And then even whether or not you have policies and procedures in place that will prevent a loss. And we're not even talking about a data loss. Sometimes we're truly talking about money loss, because if the person has the capability and the knowledge, they can redirect where those transactions go. So to really understand the mechanisms that you're using, because we're in a cyber world and I'm old and I don't keep track of all of this stuff and it changes very quickly. So just really focus in on, instead of using some of these third-party assets, make sure that you've got a feel for where your risk starts and where their risk ends.
That's right. And as we tell our clients, it's always good to know what the risk is and to make sure that you're covered up above and beyond what any third party will offer. Because also, if let's say it's your third party, if it's Square, and I'm not highlighting Square like they're bad, but we'll just use as an example. If they have insurance for claims and their limit probably doesn't cover all their contracts, and so they run through their limit, and you're one of their clients and you're waiting for your piece of the cheese, you may not get any coverage from them. And so it's always good to consider having your own coverage in the event that your third party provider either doesn't provide you enough coverage or they exhaust their limit before you get any coverage. The third one is ransomware. This is prevalent across all industries, all sizes. It does not matter whether you're large, whether you're small. I know we're on an arts call today. I work with a lot of healthcare providers. It does not matter. Ransomware, the threat actors will take control of your network and they will hold it up for ransom. And so it's something we can talk more about, or we can talk offline about it. But actually, I'll go to the next slide. Let's see if this will go through. This is the current state of cyber breaches. So this was done by two entities over the last year in 2020. 90% of all malware was delivered by email. So that goes back to that phishing. Another way you'll hear it described as social engineering. It almost always is delivered by email, and employees let it in. And you can see their employees remain the most vulnerable element of cybersecurity. And so social engineering is, I'm a threat actor, and I know that Allison and Don work together. So I send an email to Don that looks like it's from Allison, and it tells Don to go buy $2,000 of Bitcoin or $2,000 of Visa gift cards. And so Allison, looks good to me, or Don says, looks like it's a real email from Allison. So he goes ahead and clicks on the links and does it. And then you find out later that the two of them talk, and Allison's like, I never sent you that email, Don. And Don's like, oh my gosh, it looked like it was from you. What have we done? And so be very mindful, continuously remind your employees. The other area they've seen a lot more of these claims is because more folks are working from home. And so they tend to just have their guard down a little bit more when they're working from home. Whether they're distracted with things that are going on at home, whether their mind's just not quite in the same, sharpness. We have seen more of these types of claims, and the threat actors continue to do it over and over again. And you can see there, ransomware, a 946% increase on the average demand from just 2 years ago. And so not only are they being more successful in deploying ransomware within a network, but they are asking for more money. The good news is the carriers, the insurance companies that provide cyber coverage, they know who the real threat actors are and who kind of the pretender threat actors are. So you'll have some bad guys that will take over your network and they'll say, you need to pay me this ransom, and you pay the ransom, and they give you your information back. They give you your access back. There are other bad guys that you'll pay the ransom and then they won't give you your information back, or they'll say you need to give me more. And so the carriers know who's for real and who's kind of phony baloney, who will negotiate and who will not. And so there are many cyber markets out there that are good. In our world, it's your broker's job to know who are the good carriers, because the good carriers know if you get in the event of a claim, who you can negotiate with, who you have leverage with, and who you do not. And you just need to pay the claim. And so they can kind of help walk you through that, all that crisis that comes with that. We've done it with our clients many times. So hopefully everyone on the call has a good partner for it. So the last thing I'll touch on here is the renewal and placement process. So, many organizations on the call, you may be in a variety of different places of when your insurance renews, otherwise the effective date. And so here's some good tips that we would impress upon you to think about. So start early. 4 to 6 months in advance of the renewal, your broker should be reaching out to you. With our clients, we typically have a cadence of quarterly meetings. We'll submit quarterly information to them just so that they know where the insurance market is. They don't always read it, and that's okay, but we want to make sure they have access to it. But as you get closer, really that 4-month window and in, we're going to start to work on it. We have personally called the client engagement strategy and that renewal process. So we'll meet with you and we'll talk about, what has changed in your world over the last year. What are you looking to maybe be doing different in the upcoming year? We'll provide some education on what the insurance market is doing and bearing. And then together we'll put a strategy together of how to handle the risk. Maybe we'll change, limits. Maybe we'll change carriers. Maybe we'll look at a new coverage that we haven't had in the past based on where you want to take your organization. And so, there's a lot there. I won't go all over them, but identify the critical issues in the strategy. So make sure everyone within your organization knows kind of the direction that we're running. Ask your broker to provide you meetings with the insurance companies. So we'll do that often a lot. We'll actually bring the insurance company in to meet with the insured. They like to get to know you because they're providing you limit and coverage. Make sure your broker's helping you out with the applications and the submission process. I'll make one comment here on the financials. Relative to insurance, you don't want to lie in your application, but don't overstate what you project your financials to be in the upcoming year. So for example, if you, let's say you're $1 million organization and you think you're going to double your revenues to 2 million, it's okay to say that you're only going to do $1.5 million in revenue. If you say 2 and you don't hit 2, then you've paid for coverage that you really didn't need. And so we try to advise our clients on, proper application answers and just make sure that they're not overstating what could be, which at the end of the day is not a good use of the risk transfer.
Bill, I think the key element that obviously those are all good recommendations, but the very second thing there, start early, 4 to 6 months in advance of renewal. I think that becomes key. And as I listen to more and more people talk, I look at from a risk standpoint, right? I'm a risk averse person as an auditor. I go in and I try to evaluate risk and I say, okay, where are the risks for misstatement? Where are the risks that things can go wrong? When COVID-19 hit was when I told my not-for-profit clients, which there are a ton of, that I'm tired of hearing that you don't have risk to assess. We have to start spending more time and broadening our risk assessment. Over the last 14, 15 months, I've become a proponent that, because this is a lot, right? Insurance is a lot. Internal controls are a lot. This risk area is a lot for our organizations. And it's a big area and it's an important area, but nobody has a committee. Nobody makes that part of the board's responsibilities to evaluate risk and to help us figure out exactly where we're going and what the risks are. Because some of the things Phil and I've talked about are important and some aren't. And that becomes your job as an organization, is to identify your risk, because based upon that, you can then determine what to put in place. So start early. Start the phone call that I get 2 months before someone needs an audit is always the worst audit, right? It's just awful because they're not ready and they'll not get ready. Start early, start early, start early, and evaluate continuously. So I think that at that point, Phil, we're running pretty tight on time, and I want to be very honorable of everyone's time. I know there's been a couple of things in the chat. I don't know if there's any questions, if it's possible to open it up for questions for Phil or myself, or if there's any things of clarification that folks may have.
Well, since it doesn't seem that anyone has a question, but maybe you do, I'm just going to reiterate what we've been chatting about. A couple folks have asked about cyber training. So we do that with our, we consult, we have contractors that do our IT. We don't have anyone in-house. And so it's a part of that partnership and relationship. So first thing is, if you are outsourcing your IT, start there. If you're not, then if you're using a ticketing platform, check with them to see what risk management and training they might have for that. In the meantime, I will check to see if our consulting company does general. So I'll just tell you, like, literally we do training every month and it's online. And I mean, there's a cost associated with that. So this would be more of a general training, but I'll check to see that and I'll keep you guys posted. Here's a question. Is cyber coverage always a separate policy, or is it covered under general liability?
Good question. It is not covered under general liability. Well, let me back up. It can be. You can also buy it what they would call monoline. So it depends on how you've structured your program. Often what we'll see is if cyber coverage is included as part of a package, it is table stakes coverage, which means that your limits are potentially very low and the coverage is very restricted. So, if there's interest, I think Allison can probably share information. We do a lot of policy audits for non-clients to give them a kind of a third-party perspective or an outside perspective of what their policy does and does not cover. So, we're happy to do that. But generally, if it's cyber coverage that you have not bought separately as a standalone, it's probably very limited.
That's a great question. The other thing I just wanted to say is I feel like the moral of this story today is to work closely with your insurance broker and your CPA and auditor, checking in, build it into your calendar to do that annual check-in, if not more frequently, thinking about when there's change in your organization. I'll just tell you, like here, Kayla Green, who's our director of finance, works with our auditors very closely. And so when we're trying to think about a process, changing a process, sometimes she'll call and say, does this meet audit standards? So it's not just a one and done relationship, and just remembering to think about it's a partnership. They have a goal of helping you as well.
Allison, that's a phenomenal point. I will tell you, my best client relationships are the ones that I talk to consistently. And what we've tried to do is figure out a way that does not create a financial burden, right? Because I do not want a meter to prevent us from having a great relationship. So we need to figure out how to do that. And those clients that are one and done, and I'll see you next year, those are usually transactional relationships, and they're not really great relationships. So it becomes a matter of hey, let's have this conversation. I have a couple of clients that, just like you were saying, they will do a new policy and procedure manual, and they'll send it to me, and they'll say, hey, Don, we take a look at it to make sure we've covered off on the things that we need to cover off. That's when you've got, and what Phil is talking about, that's when you've got a partnership, and those become really important to progress your organization. And don't be afraid to ask for those. So many times we're afraid to ask for the partnership because we know that everybody wants to make money, and we know that everyone needs to make money. But I know my best long-term 10, 12-year clients are the result of the partnerships.
That's wonderful. Thank you. I want to thank Don and Phil very much. This was really great presentation. We did record it, so I'll be sharing that. We'll post that on our under the workshops tab on the GCAC website. I'd also ask Phil and Don if we could have a copy of the PowerPoint. I will follow up in an email with all of you. If you've signed up through our Sign Up Genius, I'll have your email. I'll send you the link to the recording and PowerPoint, and also their Dawn and Phil's contact information if you have more questions. I also wanted to get on your radar that we are going to be doing, as a part of risk management, which is a big topic for us this year, a crisis communications workshop also in June, on June 8th. If you're not receiving our regular e-newsletters, it's called OpArt, which will tell you about workshops, grants, deadlines, links to all kinds of other opportunities, particularly for artists. I will also include that in the email, so you have that opportunity to sign up if you want to. That's the best way to find out what's coming ahead. So, all right. No other questions. I'd say thank you to all of you, and keep your chin up.
Thank you guys for attending.
Thank you.